Oh boy, we got a lot of things to talk about today in this early morning. Right now it is 08:55 a.m. I don't really have a schedule of when I'm going to be putting these videos out, so if you are new here, welcome. Talking about a variety of different things on this channel. Um yeah, it's really I mean, I have no problem making multiple videos in a day, and I have before. Today I'm going to be relatively busy in the afternoon, so I'm doing a early morning video. We just got a massive jobs report dropped, which we're going to be covering here momentarily. But yesterday, uploaded a video, not in the morning, more so like midday, and same thing with a couple days ago. Not to mention, I did buy some stock yesterday and opened a new position in my public profile. And we're going to be talking about that. But let's get right into the jobs report that just dropped. So we got the jobs report for September. You got to remember is that the government was shut down for about a month and a half. And these reports, they lag. So because they lag, it's the month prior. Theoretically, we should already be getting the October jobs report, but the government was shut down last month, so we didn't get the September jobs report. September jobs report just came out, 119,000, beating expectations. Pretty much signifies that, hey, the economy right now is like not going off of a cliff. Not to mention yesterday, NVIDIA came out with their earnings. We're going to be talking about that momentarily too. But NVIDIA, yeah, amazing blowout earnings, but a little disappointing on the stock price. Actually, very disappointing on the stock price. So firstly, to go over the jobs report, if you want to see the actual full jobs report, you can see it on the BLS website. But the overall, gigantic thing is that we beat expectations. However, this is September. This is not October. So you got to remember that this is not the month prior. We really don't know what is going on in the month of October. And a lot of people are there's a lot of really chaos in the market, which, to be honest, is really not bad. Because typically when the stock market leans in one direction, if the stock market is completely bearish, like yesterday, the stock market was very bearish in the first portion of the day. Now the stock market is really kind of shifted in a way, but there's still a lot of confusion. If the stock market is bearish for like 2 months, that is a phenomenal buying opportunity. If the stock market is extremely bullish for 2 months, I'm going to be taking profits on my swing positions, on my short-term trades, and I'm going to be looking to just build a cash position. Because you always want to theoretically do the opposite, especially when you are a trader. Obviously, being a long-term investor, very different, but being a trader, you very much want to pay attention to that type of ideology, the psychology of the stock market, and also people, because when the stock market is too bearish, obviously it's not going to be bearish forever. When it's too bullish, it's not going to be bullish forever. When there's kind of like chaos back and forth, you just really got to buy the dips, in my personal opinion. And that's what essentially I've been doing. I did buy some more stock yesterday, a couple hours when I got done recording my last video here, and I did open a new position as well, which I want to cover soon. But the jobs report came out, not apocalyptic. The rate cut for December is still on a table with a slimmer chance. Odds of a December rate cut. Hold on one second. I got to pull this up. Theoretically, the odds, the interest, approximately 30%. So, according to AI here, not to mention, I can also pull up some reports as well, but pretty much pulling from the overall consensus here, we have a 30% chance of a rate cut. I mean, it's not good. It's really not. Like, imagine if you go into a major surgery, whether it's an orthopedical surgery or whether it's some surgery to save your life, and you get told you got a 30% chance to come out like swinging. That's not a good chance. That's actually a very bad chance, in my opinion. But anything is possible. We in the whole, so right now, we more than likely will not be getting October's job report before the Federal Reserve convenes. I believe it's December. Oh boy, I should pull this up. December 18. Oh no. December 2025. That was last December. I actually remember that. Shenanigans. When is the Federal Reserve meeting? Pretty sure the Federal Reserve meeting is the second week of December, December 10th. Okay, so they're going to be meeting December 10th. That their new report is not going to be out until theoretically after that, which is a little upsetting. But let's say hypothetically, like, all hell breaks loose, the Federal Reserve can always do an emergency rate cut. A lot of people misunderstand. If something goes south, then the Federal Reserve, in a blink of an eye, can be like, hey, like, hey, we're going to lower interest rates. They don't need to wait until the FOMC meeting. They can literally hold a meeting and be like, hey, we're going to take a vote. Okay, we're going to lower rates. And they've done this before in our history, during really bad times. But are we in those really bad times? We're really not. So I want to go to really NVIDIA earnings before I dive into my public profile and stock that I did buy yesterday in my new position. If you saw yesterday's video and are looking at my trading view, you probably already know what my new position is. It literally is long positions. But okay, so let me cover NVIDIA really quickly, because this is something that really kind of. It really kind of, I don't know. It's, oh man. I was talking, I have a really good friend of mine. He is a NVIDIA bull. He has made a tremendous amount of money in NVIDIA. Very similar to how I am making a great deal of money in SoFi. He is the equivalent of me with my SoFi, and ironically, he actually thinks SoFi is actually a terrible investment. It's pretty funny, but I love talking to people like that, and I love listening to people like that because you see things from a different perspective. His whole thing about NVIDIA is that this stock is going to be a $10 trillion company in the course of the next 5 years. His whole ideology is that we are really not in an AI bubble. Yes, an AI bubble is forming, but we are on the lower end, not the higher end. A lot of people are screaming, saying, oh, we're going to pop. NVIDIA's earnings were phenomenal. Utterly amazing. Like, you want to talk about, like, hitting everything and getting, like, 100, like, probably if they were taking... If they were taking going through a college course, it would be like a 99%. The one thing that really did piss me off about doing my undergrad is that I would like write phenomenal papers, and I would have professors give me like 95 out of 100. And I would say to them, I'm like, hey, how come you gave me a 95 with no feedback? And the response I would get back is that your paper was amazing, but we don't give A+ grades in college. That's more so kind of like a high school thing, middle school. I honestly, I'm 37, so I haven't been in high school in many, many years. I don't even know if they give A+ grades anymore. But the whole point is that you get an A in a course, that is your highest grade that you can go ahead and get. And if you get all A's, obviously your GPA is 4.0. you're not going to see an A plus. NVIDIA is pretty much the equivalent. 95 is 100, 99 is 100. Every single thing about them just came out. They're spending more on everything. Their earnings beat, their guidance beat, their EPS beat. It was really amazing. Obviously, we knew their revenue was going to beat. Some people were a little bearish on their EPS, earnings per share, but the guidance on how they're still spending massively just really takes a lot of fears off. A lot of people are really with the consensus that next year their growth rates are going to slow down tremendously. People aren't really too sure if that's going to be happening anymore. And the biggest kick in the nuts is, why isn't this stock up by like 20-30%? That is like my question. And I asked my friend this actually about an hour ago. And I'm like, hey, I got to follow up on our conversation from last night. Why isn't this stock up by 30%? And my friend actually said something very valuable. It's because we're living not in 2024 and 23. In 2024 and 23 on NVIDIA, when they murdered earnings, completely shattered it, you saw this stock, every single candlestick here is one day. You saw this stock go up after earnings. Prime example, back in February 24, this was they were $600, but you're talking like 20%. I actually remember this. They were at 20%, and you're talking in the course of a month, the stock is up. The stock is up in the course of 1 month. 1 month. The stock is up by 50%. So why isn't this stock up higher? And my friend said a very valid point. The stock is too rich. We're not going to see this company go up by 20-30% anymore. However, is it pulling up the market right now? Oh, it is. 100%. And I actually said this in yesterday's video. If NVIDIA has came to save the market multiple times. Right now, this stock market is very much propped up on AI, and you have the richest company in the world, public company in the world, OpenAI. If they were a publicly traded company, they would be at like $5-10 trillion easily with future valuation thrown in there, and of course FOMO up the wazoo. But at the same time, you look at NVIDIA, the stock has just ran up so much that it is hard to make this stock go up by 20-30%. Because if the stock goes up by 20-30%, you're adding like damn near $1 trillion. Actually, yeah, you probably, it's 20-30%. Yeah, you would be adding $1 trillion to the stock market. That's hard. Okay, now imagine if NVIDIA goes down by 20-30% in one day. That is taking away over $1 trillion from the stock market. That's insane. So you got to remember that it's a lot harder for these companies to go up. Now, is this company pushing up the market? Yes. The indexes, as you see, we are getting a very nice reversal. The SPY is very much above the 50-day moving average. Same thing with the Qs. The Russell has gone above the 100. And in the IWM small caps, typically, if the SPY and the Qs are relatively below the 50, that means the Russell is going to be below the 100. But now we're seeing the SPY and the Qs get above the 50, and we're seeing now the Russell get above the 100. The NASDAQ is definitely making a solid recovery, which is very nice here. And then also you see Bitcoin. Oh, wait a second. What's going on here with Bitcoin? Yeah, you see, this is something that people are not talking about. Bitcoin. So let me ask you this question. If NVIDIA has came here to save the day along with this jobs report, well, why the hell isn't Bitcoin risk on? Why is Bitcoin not like very much rallying with everything else? And this is my honest feeling that this is pretty much a bull trap, And this is a artificial push higher because there's still a lot of problems down the road. We got the Federal Reserve meeting, which can shake the market. If we don't get a rate cut, the market, I mean, if we don't get a rate cut and Powell comes out and be dovish, maybe we just continue to kind of really slowly trend upward. But if Powell comes out with no rate cut and he's hawkish, the market's gonna go down to Chinatown. Bitcoin pretty much is a risk-on asset. And the fact that we are not pushing to at least 95K, pretty much recovering for the last week, is really telling me that a lot of things are very cautious still. And this could very well be a fake out sort of a rally. Okay, so now moving on to the last portion, or actually two parts of this last portion. One, what I'm going to be doing, and also the stock that I ended up buying yesterday. If you've been following me in the last couple videos here, pretty much doing a public profile challenge. Yesterday, my profile was actually near 24,000. Depending how much the stock market either corrects in a way, and I could be dead wrong, maybe we just rally for the next year. That very well could be a possibility. But I mean, if we experience a very nasty sell-off, obviously I'm going to be deploying a lot of cash. I would love to do a 100K challenge. Take 25K to 100K over the course of maybe about the next year and a half. Very feasible as a trader. Not gambling, not doing anything stupid. Just really buying great companies and also going to some risk-on companies as well. But yesterday, when I got done recording the video, I actually did buy some shares of stock. Yesterday was the 19th. Let's see. So I did pick up Meta. I did pick up yesterday. I believe when I recorded a video, I did share this. I did buy some more Palantir. And I also opened a position in Honest Company. Want to talk about them for a little bit here and why I ended up opening a position in Honest. I was going to keep this account maybe around, like, I want to say 5 positions. But now, honestly, really thinking about, like, some different strategies and stuff, I got to maybe get some risk-on assets in here. SoFi is my largest position on this account. I was buying SoFi on Liberation Day back in April. My private profile, I got over 1,600 shares of SoFi with a $7 average. I was buying SoFi back in 2024 when people thought SoFi was a bankrupt company. Oh, yeah. Morning electrolytes. Cheers. Hold on. SoFi was a joke back in 2024. I got almost a $50,000 position, largest position on my private profile, in SoFi. Like I said, raging SoFi bull. See how quickly everything turns here? Like, legitimately, everything turns in a snap of the fingers. Okay, so why did I go ahead and open a honest position? And how big would I actually like to build an honest position on this profile? So on this profile, if we continue to trend down, honest is a different story, but Meta, I would definitely like to pick up some more shares because Meta right now is just very undervalued because they've been beaten down with a lot of fears of Zuckerberg overspending. But then again, is he overspending because he's a gambler, or is he overspending because he's building an empire still that is growing? You got to ask that question. I believe in management. I believe in Zuckerberg. So I definitely would like to accumulate a larger position. AMD, I'm definitely looking to make that probably a $4,000 position size on this account. Robinhood, maybe around the same. Palantir's really iffy. I've given this some thought. maybe 3 to 4,000. And then Meta, maybe 25 to maybe 3,000. Honest, probably about 25 to maybe 3,000. SoFi, I will add shares and average up if we actually crash more on SoFi. But, I mean, if Anthony Noto continues to execute, SoFi could not see the numbers down. Okay, so why did I open a honest position? Because this company is a hated company. And by the way, I'm not a financial advisor. I'm also not a degen as well. I do my due diligence, and I also do a lot of research as well, too. But Honest Company right now is a utterly hated company. If you go ahead and type stuff in to Honest Company onto YouTube, you won't really see that much coverage. Obviously, 6 days ago, what shocks me is that Jeremy LeFay, hopefully I'm pronouncing his name, absolute gigantic baller. I believe this guy is a 8-figure investor, very much investor, not a trader. He's actually in Honest Company, which is a little bit of a shocker, but it makes me feel right. Nobody is really talking about Honest Company on here, which is really good. This company, and by the way, these price targets, $21, that's bullshit. I don't believe Honest Company is going to $21 at all. That's nonsense. But very few people are actually talking about Honest here. Very few people. So what is Honest Company? They are a diaper company that is very much hated. Extremely hated. Jessica Alba had a lot to do with this company. She's also very much a flake, in my opinion. Not really Jessica Alba fan. She has said some pretty outrageous things here. However, this company has pretty much fallen off of a cliff. And they are pretty much down. And the reason why they have fallen off a cliff is because they pretty much had very weak guidance. And what their CEO has pretty much stated is that they're in a transformation period. Essentially, they are getting rid of a lot of their very bad items and transforming their business structure. Okay? What company do we know did this back in early of 2024? What company? What company did this back in 2024 that made it a hated company? Can you take a guess? Oh, yes. It is actually SoFi. SoFi, early in 2024, came out with terrible, terrible guidance that pissed off people. They beat on EPS. They beat on earnings, revenue. Why did they sell off? Because of what they were saying. They were transitioning their balance sheet. And then you fast forward nearly 2 years and you look at what happened. Anytime a company transforms their balance sheet where they go ahead and get rid of some products that aren't doing well, they take a hit on revenue. But here's a catch where a lot of people are not paying attention to. And I could go ahead and pull up their balance sheet right here. I have trained myself to really learn how to read balance sheets. I can honestly make an entire video on this. I'm not I have a bachelor's in marketing. I don't have an economics degree. But learning how to read a balance sheet is very important. But here is the most important thing about it. And you can literally type this stuff into Google now with all the AI and really pretty much see everything here. So, looking at this, just by simple typing it in, is it a profitable company? Is currently a profitable company reporting a third quarter positive net income adjusted EBITDA? Okay, so as you see, here's a big thing. Profitability Transformation 2.0, which involves focusing on high growth, high margin categories like wipes and personal care. Long-term investors and traders, they hate this. They despise companies that actually do a transformation But this is where you make a lot of money, especially when you buy these big dips significantly. So, is it a profitable company? Yes. Is Honest Company, or rather I should say, is Honest Company, or let's go ahead and say this. What is Honest Company's assets? What is their assets? Here we go. Total assets is $241.5 million. Okay, so about rounded up to maybe, and then we got cash equivalents, $75 million. They got zero debt at the year end of 2000. Let's go ahead and say, is diluting. Are they diluting shareholders? Yes, they are diluting. Increased by 12% over the last 12 months of new shares. Now, the one thing that I've learned about dilution is that it's all about what companies are doing with their dilution. SoFi diluted us last quarter, but what did they do with it? They promised that they're going to be using $1.5 billion to further their growth. You look at a company kind of like a penny stock company with no revenue, no profitability, they're diluting shareholders. That's very different. Obviously, you have a company like Honest that could very well be diluting, is very different. SoFi, they diluted us by, I believe, like 8%, and it was bought up. Yeah, Wall Street bought the dilution. It was nuts. So, you got to ask yourself this question. Right now, total assets on Honest is about 240 mil-ish. Cash is 75 mil. Okay. What is Honest market cap? Wow. 291 million. 291 million. They have 75 million in cash, nearly $250 million of assets. You add that up, theoretically their market cap should be a lot higher, especially for a publicly traded company. So is this company undervalued? In my opinion, yeah, it is undervalued. I could be dead wrong. I could be hella wrong. This company could be utterly flop, but the entirety that I'm pretty much getting is that on this profile, I need to have a risk asset. It's always good to have one or two stocks in your profile as a risk asset. 2020, 2021, I made life-changing money. I didn't know what the hell I was doing. My entire profile was risk assets. Significantly risk assets. 2022, I was holding risk assets and I walked away still with a profitable year. Not as profitable as 21 or 20. I really got lucky. 23, my profile was risk assets and I got my ass handed to me. 2024 was the opposite. I walked away as a profitable trader. And I ended up recuperating all my losses from 23. 2025, I have to cut a check to the IRS once again. Yes, the cocksuckers of the IRS. So on this profile, I am very happy to have a risk asset such as Honest. Can they go ahead and drop to the $1 range? Oh, absolutely. They could. At that point, would I be a buyer? Depends. Depends on why they're dropping and what they're doing. Am I going to be a long-term holder into Honest? No, honestly not. I mean, honestly, if tomorrow, if this stock starts shooting up like it did back in November of last year, I'd be shedding shares and selling and walking away for profit. But right now, I really see a undervalued company. And over the course of the next year, this company could very well be in the $3 to $4 range. So you're talking about an 80% like upside maybe that I could be getting if I go ahead and get a full position size of $3,000 in here. You're talking about profits of 80% of near $25 to maybe $3,000 of profits, especially if this doubles. Yeah, I'll go ahead and do that. On my main profile, I have a very similar profile just like this, except larger positions. I have a couple positions on my main profile that I haven't talked about on this channel that are very risk on. And right now, for my private profile, I'm pretty much 80-20. 80% of really great, phenomenal companies like SoFi, AMD. I own a lot of AMD, and a couple other companies as well. And then 20% of my profile is really risk on. On here, I don't really have that same ratio, so I really do believe getting into honest on this company, or rather on this profile, is nothing bad. Obviously, if you disagree, definitely let me know. I will enjoy reading your comments. Yeah. It's actually utterly amazing how honest really is not up higher right now when I'm looking at all these other companies pretty much recovering. SoFi is getting a great bounce here. Palantir is above the 100, getting a good bounce. Robinhood is above the 100. AMD is still above the 50, but they're above a key pivot point. Meta is getting a great bounce. And then we're looking at pretty much honest, and even Amazon is getting a good bounce. But we look at honest, there's really no bounce here. So that really does lead me to believe that honest right now is a hated company, which is good. Hated companies are good. Like, really, really good. But I'll continue to cover more, and I'll continue to give you guys updates. Oh, real quick. What am I doing moving forward? So, right now, my profile here is green. I mean, all my positions are green, even honest. Am I going to be buying stock today? No, I'm not going to be buying stock today. Why? Is because I truly believe that this rally is artificial. Do I think it's going to be a major sell-off? Not a major sell-off, but I just feel... Let me say this. Right now, if I were to go ahead and buy some shares, I'd be rushing into buying shares. It would not... I'd be happy. Like if I were to buy stock right now, it would give me a happy feeling. Everything's good. The stock market's going to continue to go higher. I'm getting stocks on a green day, right? That's wrong. You need to buy stocks when you don't feel right. The last 2 days, if you were buying stock, you were buying the fear. Every single time that I have literally pulled the trigger on stocks on red days, it's always a fearful decision. Man, is this stock going to go lower? I'm going to buy some Palantir shares here. Is the stock going to go lower? I don't know. Should I buy Palantir right now or should I wait until tomorrow? Oh, man. That is when you're supposed to buy. You're supposed to buy the fear. So for me right now, I'm just really sitting back. I'm patient. But overall, I really do believe that we're going to see harder times. And I really do believe that we have a lot more downside potential here. And this stock market, if it continues to pull back, I'm just going to continue to get in. And we're going to see how far this public profile can really go. Now, if I am dead wrong, well, I'm dead wrong. But here's the thing. I am in positions on this account, which is good. On my private profile, I'm not cash heavy as much as I am on this profile. On my private profile, I'm about, probably about 20% cash. I am very cash heavy overall, but on this profile, I'm about 50% cash heavy. Very big different ratio. So yes, I do have a lot of cash to get in, but during all-time highs, a lot of times that's when you're supposed to accumulate cash. I was cash depleted during Liberation Day back in April because I was buying all the dip. So that's really one big difference as a trader. Keep that in mind here. I've rambled on longer than I really should have. Holy nuts, 34 minutes. Please like this video and subscribe if you want to see future content. More stuff to cover and talk about, and the market is open. And oh boy. Oh yeah, we are off to the races. Oh, okay. I'll see you guys with a new video tomorrow. Later.